We have seen a very exciting quarter through Q3 2024. We saw a sizable stock market crash in August, and we have seen Couche-Tard's continuing acquisition attempt for Seven & i Holdings, a new prime minister chosen, and much more in the wider world. I'm going to use this video to try and impart some of my views and opinions on some of these events, and where possible, how they relate to my thinking and the strategy. The month of August started with an unprecedented market sell-off that saw stock prices fall beyond the 1987 Black Monday. The trigger was a sudden unwinding of speculative short positions in the Japanese yen, known as carry trades, which had been a factor behind the currency's depreciation. The unwinding has caused a JPY surge and a massive downturn in Japanese stocks. Carry trades are widely employed by speculative traders, where JPY is used as a funding currency to invest in higher yielding risk assets. The strategy is essentially a bet against the interest rate parity theory, and as such, it is only profitable if the theory does not hold over the investment horizon. The risk is that the funding currency, in this case JPY, may appreciate significantly against the currency of the investment, which would reduce a trader's profit or even lead to a loss. The sharp falls in stock prices were not due to the deterioration of business fundamentals. Thus, it often leads to securities mispricing, where their prices deviate significantly downward from the intrinsic value. Therefore, for fundamental bottom-up investors like us, it becomes a buying opportunity. On the positive side, Japanese companies that have once again fallen below 1x book after the sell-off are anticipated to accelerate share buybacks. This is a driver that could not be relied upon before last year's Tokyo Stock Exchange announcement of the name-and-shame companies below 1x book. Because JPY continues to be the only major currency with negative real interest rates, which creates interest rate differentials with other currencies, I am biased towards the continued relative weakness of JPY. In other words, I think that JPY's status as the funding currency for carry trades will remain unchanged. For this reason, it is unlikely that JPY will strengthen against the US dollar as it did in 1995 and 2009 through 2012, when the exchange rate shot through 80 yen to the US dollar. August sell-off threw cold water on the upbeat Japanese stock market that had rallied since the beginning of the year. However, as long as the progress of corporate governance reforms by Japanese companies, consistency in domestic inflation, normalization of interest rates, increase in inbound tourists to Japan, expansion of inbound foreign direct investments in industries such as semiconductors, and outlook for positive turnaround in real wage growth do not falter, the market was expected to recover quickly and should move towards its all-time highs in due course. Valuation-wise, Japanese stocks traded at 17 times earnings just before the market crash and are currently at 14 times. This was below the levels before the start of government-led corporate governance reforms under the Abenomics policy. While the quality of Japanese companies has greatly improved, the valuation multiples have yet to reflect this. I expect the re-rating of market valuation to continue to be a tailwind. Japan's real wage growth is showing promising signs, with a 1.1% increase in June 2024, marking the first rise in 27 months, followed by a 0.4% gain in July. Nominal wages have also surged, with increases of 4.5% in June and 3.6% in July, outpacing inflation during those months. However, this positive trend faced a setback in August, when real wages fell by 0.6% year-on-year due to rising inflation, which was reported at around 3.5%. While there is optimism about continued wage growth, experts caution that the recovery remains fragile, as recent gains were partly driven by temporary summer bonuses. Additionally, government energy subsidies aimed at easing inflation are only a short-term solution, raising concerns about the long-term sustainability of wage increases and consumer spending. Overall, while Japan is witnessing a notable uptick in real wages after years of stagnation, the future trajectory remains uncertain as the country navigates these economic challenges. I have been continuously buying shares of 7 & I Holdings, the world's largest convenience store operator, since initiating the position in 2022, and now it is one of my top holdings. However, it does not mean that I am approving of the company's financial performance. It has been far from satisfactory, with the same-store sales continuing to stagnate in both Japan and the US. Low-income consumers are feeling the pinch as sticky inflation has been eroding their purchasing power. Thus, my buying is a contrarian move. The convenience store business is inherently an attractive retail business that generates high returns on capital and ample cash flow, underpinned by stable demand given that it sells essential goods. The company's long record of accomplishment as a pioneer in this field also gives me a sense of safe and sound business. To address the ongoing challenges, the management is implementing the right strategies to bolster sales at existing stores in the US, in my opinion. Convenience stores in the US are often attached to gas stations, and many customers shop there while filling up their tanks. These stores often lack cleanliness and even can make customers feel unsafe at times. There's a lack of incentive for customers to willingly shop at these convenience stores. Recognizing these issues, the company is aggressively renovating its existing stores, involving simple facelifts such as changing the store signage, installing new bathrooms, redrawing lane markings in the parking spaces, etc. Unlike my other investment cases, I have been privately voicing my opinion in a bid to exert influence on management. The scope of discussion spans all the arguments I have presented in my past commentaries thus far. To be clear, we adopt a non-confrontational strategy, so my approach is based on having a constructive dialogue. Hopefully, my contrarianism and patience for this investment will deliver fat returns in the end. 7 & I have now received an acquisition offer from Canada's alimentation Couche-Tard with further improvement after an initial rejection. Couche-Tard are the global operator of Circle K convenience store chain. The talks are still in incredibly early stages, and I do not have the faintest idea whether this deal will go through. The offer is currently being reviewed by an independent committee set up internally within 7 & I. I am indifferent about the potential outcome of the deal talks. As much as I would like to see quick results from my investment, this one has an extremely long growth runway if 7 & I can run it well globally. If anything, what is important about this event is that the world has come to know that 7 & I has value for strategic buyers. Even if Couche-Tard is unsuccessful, there will be someone else who would be interested. That should put a solid floor on the share price. Since last year's proxy battle with ValueAct, the company has come under close public scrutiny, and whatever action they choose to take in response to the acquisition offer this time, management will be held accountable. It is not difficult to imagine that there is a huge pressure on management to behave well for the good of the shareholders. If the deal falls through, management has no choice but to speed up the ongoing strategic initiatives to grow the intrinsic value of the business fast. The sense of urgency was virtually non-existent before, but I am quite certain it is now firmly installed in the company, and that will be good enough for the time being. Shigeru Ishiba was officially appointed as Japan's new Prime Minister on October 1, 2024, following his election as the leader of the ruling Liberal Democratic Party on September 27. Ishiba succeeded Fumio Kishida, who resigned amid a series of political scandals that affected his administration. In a closely contested LDP leadership election, Ishiba won with a narrow margin of 215 to 194 votes against Sanae Takaichi, marking one of the closest races in decades. I do not have much of a view on the election of the new Prime Minister, as I believe Ishiba, like the previous Prime Minister, has a political desire to maintain a largely supportive environment for businesses. While he has emphasized a stronger national defense strategy, he is driving an agenda around economic revitalization and political reform and accountability that, if carried out, could benefit corporate governance reforms and capitalistic mindsets within Japan. There have been a lot of events that, as a long-term investor, can be characterized as short-term noise. We, of course, need to weigh the effects of this noise, but most of these recent events have brought attention to Japan and the value international companies like Couche-Tard see. I continue to see enormous potential and interesting investment opportunities in the future of the strategy. And I firmly believe that the strategy in place is more than sufficient to succeed through these events and beyond.